Hey YouTube investors, this is Steve from the Stock Market Chart channel. Guys, horrible day today. The Nasdaq went down almost 5% because of the geopolitical tensions and waiting for the Fed decision. And today I'm coming to you guys to check it out, like how this plays out in the context of Palantir. And I'm bringing you a question that we would examine in more details. Is the Palantir stock based on hype? So this is going to be a question. I've seen a very interesting article and we are going to basically get into the details, see what it states and see if it's realistic or not. But before we start, guys, please make sure that you smash the subscribe button. As usual, this is the ask for you guys. We are approaching slightly the 100 subscribers. At 100, if we reach 100, I'm going to organize a giveaway. I'm going to basically select one of you, one of the first 100 subscribers who would receive a free Seeking Alpha subscription for 1 month. So please make sure to subscribe to get this subscription and also to support my channel and to not miss any of my future updates. Now the intro, a sip of water, and we would examine if Palantir stock is based on hype or not. Let's get started. So here we go, guys. Very interesting reversal pattern that we've seen today, both in the terms of the Palantir stock and both in the terms of the major US indices. The Nasdaq was almost down 5% earlier during the trading session, and it closed at plus 0.6%. And for Palantir, this reversal was even more severe. We've seen minuses at around minus 12%, and we closed below minus 1%. The closing price is 13.33, so we climbed above 13 US dollars, so that's pretty good. And these heavy reversal patterns are promising sign that basically the trouble is not as severe as previously. Imagine we've seen a similar reversal pattern a few days earlier, but that was in the opposite direction. And basically that can be interpreted as more negative. So this is where we are, guys. And as I promised, I want to look into an article and I want to basically analyze the details of this article. The headline that you can see on the screen asks if Palantir stock is built on hype. So is this a hyped up stock without any intrinsic value, or it's the opposite? Eventually the current pricing is an attractive entry point for potential buyers. So we are going to dive into it. I'm going to keep this story short and sweet because your time is precious to me as always. So let's get started right away and let's decide if Palantir is a hyped up stock. Okay. So basically, the article says that Palantir appears among the 10 most popular stocks on the Wall Street Bets community. So it's very popular. People are talking about it. People are posting about it. And it was one of the most popular stocks in 2021. And this is basically, it can be a sign that the stock is basically a subject to a hype. We've seen similar stocks like that from GameStop and other meme stocks. So it's a potential subject for being hyped up by the community, but we cannot decide this question without looking into the fundamentals of the company. So this is just a hypothesis at this stage. What does Palantir do basically? So just very briefly, I think that probably many of you are familiar with the stock. For me, it's a high conviction pick. So I could basically talk about Palantir for days, if not weeks. Just very briefly, it's a data management company. It basically creates platforms for integrating, managing, and securing data for their clients. The company has both governmental clients and also commercial clients. The highest potential is for Palantir is still in the commercial space, because they're basically the first 100 companies could be potential clients of the company. So there we are basically waiting for a major breakthrough for Palantir, but that really ties back on the execution of the company. But basically, the GOTAM is for the governmental clients, and it's an artificial intelligence ready operating system, and it is aimed to analyze complex data for insights for governmental services. And the commercial segment is basically serviced by the Apollo platform, and basically what this does is that it integrates different data sources of large enterprises and it provides analytics, model building, visualization, and other functions. So this is what the company is about in very briefly, and just to quickly review the history of the stock price. So Palantir stock debuted in 2021, and basically right after debuting on the New York Stock Exchange, basically the stock has been skyrocketing. It has produced like a very spectacular, massive rally, and the stock price topped out at around 45 US dollars. And from there, the story became more negative. And I know that a lot of you guys just entered the stock at its peaks. And from there, basically, there was a massive loss that has been registered by the stock. And now we are basically from 45 US dollars, we are approaching slightly 10 US dollars. So it's a matter of question if what was the reason behind this very dynamic rise of the stock. It was short-term rise basically, and a lot of people say, a lot of analysts say that it was basically a result of a short squeeze. So short sellers basically were forced to close their position, and they've been forcing additional rises in the stock price. And this can basically generate a snowball effect. So basically, the rise can become faster and faster, and more dynamic. And basically, no one knows where it will stop. So we eventually stopped at $45, and as said, from there we sink down to 10 USDs. So that's where we are. You can just take a look at the stock price of the company. What has to be highlighted with regards to Palantir is that the company is basically, it was a very richly valued company, basically traded at very high multiples, very high price to sales multiples. And eventually this was partly justified by its super dynamic revenue growth rate. So as you can see, guys, the most recent number in terms of the revenue growth rate came in at 36%. And the company expects an average 5-year revenue growth rate of 30%. I think that they are pretty conservative in terms of the estimation, so I really expect that they are going to exceed this estimation. But this is what the official projection by the company's management is currently. So that's where we are, and we have to say that both the commercial and both the government sector segments are basically increasing quite dynamically. So I think that both of these segments were increasing by 30, 35, 36, 37%. So it's basically the growth of the company is quite balanced. We would like to see more dynamic numbers in terms of the commercial segments, but we can't really say that Palantir is only growing in the governmental segment. The company also has quite impressive, excellent gross margin and adjusted operating margins. So basically what we can see is that the operating income is around 32% of the revenue. So that's a quite good margin. But it has to be highlighted. We have to highlight one thing. How does Palantir reach these excellent margin numbers? I'm going to highlight it once again because it's really worth highlighting this one. Operating margin of 32%. How does Palantir reach this value? Basically what it does, it's a little bit like black magic, what they are doing in the background, because they are playing around a little bit with the cost. And we are going to the next section of this article. So this is one of the major criticisms formed against Palantir. It's the stock-based compensation. So the truth is, guys, that Palantir pays off a lot of its employees with stock-based compensation. So instead of like using real cash to pay the salaries of the employees, they are basically giving the employees some stock options that they could exercise. These schemes are basically applied at different large companies, but Palantir also is highly relying on this method, and this causes the dilution of the existing shareholders. So let's say you own 10% of the company, let's say, and basically the company doubles the number of shares outstanding. As a result of this action, of this corporate action, your stake in the company would decrease to 5%, so would be half of what you originally owned in the company. And this is exactly what Palantir is doing. Let's stop for a moment. Stock-based compensation is not good or bad. It's not 0 or 1. It's not a binary thing, because stock-based compensation is helping the company to attract top talent from the industry, and thus it's also creating shareholder value. So when we talk about stock-based compensation, we always have to keep in mind one thing. Does the increase in the shareholder value by applying this approach offset basically the negative impact on the shareholders of the dilution? Because let's say that you're diluted by 50%, but if the company is creating more than 50% value, then basically you are getting out positive from this scheme. And eventually, as I emphasized a couple of times in my analysis, Palantir has to compete with the heavyweight champions in the tech industry. So we are not talking about basically the easy competitors. We are talking about Google's, we are talking about Alphabet's, we are talking about Meta or Facebook previously. So you really need to catch the top talent, and you cannot really do that by just offering the traditional cash-based compensation. So you need to offer additional incentive for the employees to basically put more effort, put more energy, put more creativity into building your company. So I really think that a lot of people criticize Palantir for that, but I think that on long term, this might not be something negative. So that's where we are. And then the major point of this discussion, Palantir's valuation, is it hyped up? Is it basically still far from its fair intrinsic value? So let's take a very quick look at the valuation of the company. So as you guys already know, growth stocks in general have been heavily hit in 2022. Inflation is also skyrocketing. We have geopolitical tensions. So these factors are hurting the growth stocks on Wall Street. So basically, there have been a lot of concerns that the valuations have gotten ahead of the fundamentals in 2021. Partly that might be the case because, as I said, the company has been valued at very rich multiples. So even recently, we've been above 20 for price to sales ratio. Just to give you an insight, Microsoft is trading at 13. It was trading at 13 just recently. So it's a profitable company, basically growing from a much higher basis, and it's basically generating massive cash flows, free cash flows, and it's growing at 20% rate per year. Yes, Palantir was growing at 40%, but was still not profitable if you take into account the stock-based compensation. But after the current crash, after the current reset, so to say, I think that the valuation multiples are getting more and more attractive. So just take a look at the chart in front of you guys. I think this is very important, and this is the key point of this article and of this analysis. So in terms of the price to sales ratio, basically the forward price to sales ratio. So this is taking into account the projected sales for the next financial year, 2022, and it shows like how much the investors are paying for 1 unit of sales in 2022. And as we can see, guys, the price to sales on a forward basis is only 16.76 for Palantir. You can see a few competitors also on the screen, like Cloudflare, CrowdStrike, Trade Desk, and all of them are basically trading at massively higher multiples. And also, if you take a look at the current price to sales ratio that is based on the sales in the current financial year, we can also see some higher numbers for Palantir 21. But this is also like trades at a discount compared to the price to sales of the competitors. So this is very promising, and that could signal that some very attractive entry points are forming. And let's see what's the bottom line. So let's decide, is Palantir a hype stock or not? Probably it was a few months before at those higher values, but currently I wouldn't say that it's a hype stock. So the bottom line of the article says Palantir remains one of the most popular stock with individual investors. 70% of the stock is in the hands of individual investors and only 30% in the hands of retail investors, even after its underperformance in 2021 and so far in 2022. But it is not a stock built solely on hype. In fact, there is much to like in the recent results. Revenue continues to grow and margins have expanded nicely. The company is now generating positive cash from operations with a nice assist from its stock-based compensation. The valuation has come down significantly, making Palantir more attractive than many other growth names. Even so, the swoon in the tech stocks may not be over just yet, and investors should be cautious here. But the bottom line is that based on the recent fundamentals, Palantir is not a hype stock, guys. So hope you enjoyed this video and hope it helps you basically stick to your trading strategy. We've gone through a lot of pain in the recent weeks due to the massive hit that the growth stocks received. Guys, share with me what your view is related to Palantir. Do you own Palantir stock? And if yes, what is your expectation of the price performance in 2022? Do you think that Palantir is hyped, overhyped, or not? Please put your comments below and let's start a discussion on this. I'm very curious what you think about Palantir, if it's hype or not hype. So this was my insight. This was the article's insight, and I totally agree with that. Hope you like this video, and just don't forget to subscribe if you want to receive updates like that, because I'm coming with very interesting stock market analysis each day. Thank you very much for following me, and take care. See you on the next one. Bye.